All right, today we're talking about a stock you've got to see, MYR Group, ticker MYRG. Now, this company is one of the cleanest ways to play the gigantic grid build-out that's being driven by AI data centers. So let's get right into it, because this is setting up for a really interesting trade right now at all-time highs.
So why are we even looking at this? Well, it all boils down to this one absolutely staggering number, a projected 275% earnings per share growth for 2025. I mean, when you see a figure like that, you have to stop and figure out what's going on.
And the story behind that number? It's pretty simple, actually. It's all about the grid. AI is just insatiable. It's creating a once-in-a-generation demand for electricity, and MYRG is right in the thick of it, building out the essential infrastructure to get that power where it needs to go. That's the fundamental why driving this stock's incredible performance.
Okay, so when you look under the hood, all the pieces just click into place. You've got that Zacks rank #1 strong buy rating, which is basically a top-tier stamp of approval. It's also riding these huge long-term waves, what we call secular tailwinds, from both AI data centers and the broader electrification movement. Throw in a nice analyst target, very low debt, and the fact that big institutions own almost all of it, and you're looking at the checklist for a really high-quality company.
So that's the story. But you know what they say? A great story needs a great chart to back it up. A powerful fundamental case like this almost always shows up in the price action. So let's take a look.
Oh yeah, the chart delivers. Just look at this thing. It has been an absolute rocket ship. We're talking about a move from under $98 all the way to where it is right now, pushing fresh all-time highs around 271. I mean, this is the very definition of a freight train trend.
And if we dig into the technicals a bit, the strength is just undeniable. The stock is floating nearly 16% above its 50-day moving average, and almost 28% above its 200-day. Now that's fantastic, but it should also set off a little alarm bell. It tells us this thing is getting a little stretched, a little hot. So the key level we absolutely have to keep our eyes on is that $250 mark. That's our line in the sand.
Okay, so the story is a 10 out of 10. The chart is a 10 out of 10. It almost sounds too good to be true, right? And usually when it sounds that way, there's a catch. So what is the one thing that could derail this whole beautiful setup?
Yep, it's earnings, coming up on February 25th. This is the big one, folks. A true binary event. The kind of thing that can either send this stock flying or crater it overnight. It's a complete coin flip, and it's right around the corner.
And look, it's not just about the earnings report itself. You have to understand the whole risk picture here. First, the valuation is steep. We're talking over 43 times earnings. Second, the trading volume is pretty thin, which can make it choppy and hard to get in and out of. And then, and this is a big one, Nvidia reports on the very same day. That's a potential double whammy of market-moving risk. And on top of it all, MYRG's track record isn't perfect. It's actually missed on revenue half the time over the last 2 years. So a beat is definitely not a slam dunk.
Okay, so knowing all that, how do we actually trade this thing? I've got two potential game plans for you. First up is Plan A, what I'm calling the risk-off approach. This is for those of you who want to play the momentum, but, also want to sleep at night by avoiding that earnings gamble.
All right, here are the numbers for that. Your entry zone is right here, in this current breakout area between 265 and 270. Your stop loss, that goes right at that key 250 support level we talked about. The target is up at 285, based on that Cantor Fitzgerald price target. But, and this is the most important part, you are out of this trade before the closing bell on February 25th, no matter what. You take your profit or your small loss and you walk away. The risk to reward isn't huge, but you're trading that for peace of mind.
But what if you like the gamble? For those of you with a higher risk appetite, we've got Plan B. This is the risk-on play. You're not running from earnings, you're running into them, betting on a huge upside surprise and a post-earnings gap-up. The entry is the same, right around that 265 to 270 zone. But everything else changes. We've got to give it more room to breathe, so we're widening that stop-loss way down to 240. Why? To survive any pre-earnings jitters or a quick shakeout. And because we're taking on that massive earnings risk, we need to be paid for it. So we're looking at a first target of $300, and if it really explodes higher, a second target way up at 320.
So let's zoom out and put a bow on this. What we're really looking at here is a classic showdown. It's an unstoppable force meeting an immovable object, and you have to decide which side you're on.
In one corner, you have this incredible powerful bull case, the massive AI tailwind, that jaw-dropping 275% growth projection, and a chart that's just a thing of beauty.
But in the other corner, you've got that one massive hurdle, the binary earnings event, a rich valuation, and some pretty thin volume. It's a textbook risk-reward decision that every trader has to make for themselves. So the question you have to ask yourself is this. Is this explosive growth story about to get another massive shot of rocket fuel from earnings? Or is this all-time high just the perfect bull trap set right before the news drops?
And of course, a quick reminder for everyone, this is all for informational and educational purposes. It's not investment advice. Trading is inherently risky, so please be smart and careful out there.